We sure enjoy doing these shows every week for you. We hope you get great information and education out of those. This week is no different though. We're going to dive right into 4 great topics. Income planning, how a fun four-wheeler ride for me as a youth turned into thinking about income planning. Market fundamentals, what does that mean and why is that important to monitor over time? Standard deviation, I'm going to talk about how a weatherman and an investment person both use standard deviation. And finally, we're going to talk about the benefits of holistic planning. All of the various things that you may not be thinking about that you want to make sure are wrapped up in your plan to retire well.
Retiring Well, brought to you by Centennial Wealth Advisory, financial advisors specializing in retirement planning and serving all of Northern Michigan. Retiring Well, helping you plan for a successful and comfortable retirement. Retiring Well, plan to retire well.
Here at Centennial Wealth, we spend a great deal of time talking about income planning, but it seems to be one of the least attractive or least exciting things for people to talk about, but yet so ever important. You know, when I think of income planning and the lack of planning that some folks put in this, it makes me think when I was maybe a late teenager, early 20-year-old, a good friend Matt and I had just got these Yamaha Banshee four-wheelers, and we were in the fast vehicles and, you know, young boy men things that we used to do, and we took off on this trail ride with these hopped up racing four-wheelers, and we were going through the Baldwin area on these trails, but we never had a plan of what we knew where we wanted to go, but never once did we think of, hey, we're going to need gas along the way. These things are racing four-wheelers. They're going to get hot. And we're often thinking we're all fun and nothing can go wrong, but we never laid out a plan of where to stop, how to get fuel. These are two-stroke engines. They required mixed fuel. And so fortunately for us and some good Samaritans out there, we were able to get fuel and get back to the trailers and have fun. But folks, with income planning, it's similarly. There's a lot of pieces that have to go into this plan, and you have to have a goal out there of what this may be. There's so many elements. So just like when we the four-wheeler story there, you know, there's fuel, there's the roads you're going to take, the trails you're going to take, and how to get to that point. Oftentimes people come in and say, you know, I'm fearful I'm going to run out of money before I pass away. Well, that is a big concern, right? And other times folks come into me, and I'll never forget this. One of our great clients said, you know what, I want to bounce my last check to the funeral home. You know, when you look at all the different ways somebody may approach to income planning, those are some of the things that you want to consider, right? Not only what are your needs, what are these accounts you're going to take from? Typically, when you're producing income, you want to take them from low volatile accounts. Simply speaking, you don't want to have to sell low, right, to produce your income. So when you're looking at income, also you have to consider taxation. When you start pulling from these accounts, there's going to be typically some form of taxation. And so if your income plan doesn't directly coordinate with a tax plan, it's likely flawed. How do you know you're taking money out the most tax efficient manner as possible? And lastly, I'll leave you with this. Oftentimes when folks do say, yeah, I have an income plan, look at this, and they hold up this super thick bound thing, maybe it's laminated, whatever it is, and wow, that's wonderful, what's inside? And they'll say, I don't know, I've never read it. You know, oftentimes these big, large, fancy plans look wonderful, and maybe deep down in there, there's some good stuff. But if you don't understand it, what good is it? If you can't read the map that was laid out for you, how are you ever going to follow it? So folks, I can't stress this enough. Have an income plan and have it coordinated with all the other so important things. That's why we believe in holistic planning here at Centennial Wealth, and why we believe that's one piece of how you can plan to retire well.
Hey, welcome back to a little bit of talk about income planning and how proactive and how helpful it can be to looking at things from a long ways away. You know, in our world, we hate surprises. We want to see anything potentially difficult coming from a long ways away. We don't want to have to be right on top of it to try to have to react. And so we are able to stay ahead of things as much as possible, I think a lot in part because of planning. You know, when people come into the office, it often reminds me of what Dave Ramsey taught about income planning and budgeting. He said, typically you're going to have, you know, people that navigate towards the side of things, or people that navigate towards the free spirit side. It's all going to be okay. I see this play out in the Cadillac office quite often, where you'll see one person that just loves the numbers. That's what they want to talk about the whole time. And then you might see the other side that want to stay as far away from numbers as possible. Well, with income planning, we have a tool where I can mesh the two of those parties together, where we can build out this plan and I can point to one column and just say, does this make sense? This is what your income plan looks like. They understand it, and then they feel much better, I think, once they can see, how their particular numbers might work out for a long time, till over 100 years old. So I know, Nick, you get to...
Yeah, I mean, that's the same with the Gaylord office as well. I mean, with those number crunchers that we come across, that software program that Jack was talking about really will dig into the weeds as well. So we can show you, hey, this year, this month, we're going to be pulling from this part of your portfolio. I mean, it goes in depth that much for you to look at, but also it helps really paint that picture, give you that visual of through the years where the different sources of income are coming from and what your total expenses would look like, right? So that's why it's just so important to have a solid income plan in place. So if you have any questions about that, or maybe you haven't even thought about like what your budget looks like or what that income plan might look like, please don't hesitate to reach out and give us a call on the screen. All right, coming up next, we're going to be talking about market fundamentals and then standard deviation. You don't want to miss it.
Financial planning is more than just providing for yourself. It's making sure your loved ones are taken care of. It's preserving and protecting what you've worked for all those years. It's leaving a legacy to your children and grandchildren. It's providing a level of stability and security. Planning is the first step to succeeding. Plan to retire well.
Your grandchildren are precious to you. They are your life. This is your time to have that special relationship. Taking care of yourself is taking care of them. Centennial Wealth Advisory is offering a free, no-obligation retirement review to make sure you don't run out of money during your retirement. Centennial Wealth Advisory. Your best is yet to come.
Market fundamentals. There's a lot to listen to when you turn on the news, and everybody's going to share their own opinion. But for the most part, markets will trade at a multiple of its earnings. There's always going to be volatility in the market, and we've recently seen 3% drops happen in one day, but that's going to happen and continue to happen. So as far as market fundamentals, it's a general rule that markets will trade based on the underlying earnings of the corporations. So historically, that's been in the 16 to 17 times earnings, but when it's higher, you may consider it overvalued. When it stays above that line, that's going to be a bit concerning for the long term. If it's below historical averages, then some might see that as a potential buying opportunity. So again, you want to pay attention to the earnings above or below as far as market fundamentals. What about when it's trading within the norms? That's, you're not going to be above or below, and then you hear something negative happen in the news, and does that necessarily mean that it's time for you to react? It may create an increase in emotions, and that's a challenging one for investors to try and remove the emotions from their investment strategy. So for long-term investors, it's typically sticking with those underlying earnings, which can be very important for your plan. Another area to pay attention to as far as market fundamentals is what's driving consumer spending. So consumer spending represents about 70% of our GDP. And then when you look at business spending, that makes up an additional 18%. So knowing the trend of where consumers and businesses are spending, it will help us determine where earnings stand and then essentially help drive the market. So what are some of those areas that can impact earnings? Well, what about low unemployment, or why would that be good? Well, if more people are working, then there's more money in their pockets, and if they're confident in the economy and they'll spend more money, then that's going to improve the corporate earnings, and it essentially should be good for the overall market. Consumer confidence is another market fundamental to be paying attention to. When people aren't as confident in the market, guess what? They're probably not going to be spending as much money, which is going to reduce those corporate earnings. So again, there's a lot of different factors to be paying attention to. I know here at Centennial Wealth Advisory, when talking about these market fundamentals, it's something we have to stay on top of and really evaluate and determine sort of what direction the markets are moving. So if that's something of interest to you, we'd love the opportunity to sit down with you and discuss this further.
Living life isn't always easy. It puts up challenges and obstacles you'll have to overcome. There are responsibilities. You put in effort to provide and take care of your family, to save and invest, to balance work and life. Planning is the first step to succeeding. Plan to retire well.
What can Retirement Analyzer do for you? Retirement Analyzer is a software tool that can help you prepare today for your financial future. You've worked hard to save for your retirement, but as you near your retirement, you may have concerns. Have I positioned my retirement savings wisely? Have I saved enough for retirement, and will my savings last throughout my lifetime? What impact could inflation have on my future expenses? What if I suffer a long-term illness? Will I have enough money to cover my medical care expenses and still be able to meet my other financial obligations? Could changes in the income tax rates disrupt my retirement strategy? There's no need to be in the dark as you prepare for your retirement. Retirement Analyzer can help you find answers to all these questions and more. The first step is providing us with information on your financial assets, the type and current value of those assets, as well as your sources of income. Then, we work with you to identify your expected expenses in retirement. This will include a discussion of the lifestyle you envision in retirement, travel, a summer residence, whatever you dream your retirement will be. We'll input the information you provide us into the Retirement Analyzer, and in a very short time we'll have reports that show us the percentage of assets currently in high-risk vehicles as well as the percent in lower-risk products. Retirement Analyzer enables us to project your income from year to year in your retirement and see how long your retirement savings may last. As we change the conditions of the report, delaying your retirement date, including costs for long-term care, adjusting the expected tax rate, or adjusting your retirement strategies, we can see how changes in these variables may impact your income in retirement and the longevity of your retirement savings. Let the Retirement Analyzer help you test drive your retirement strategy today, because the time to discover the bumps in the road is not once your trip through retirement has begun. Contact our office today to schedule an appointment for your Retirement Analyzer review.
All right, we're going to take a little break from all the other information here we've been talking about today. I want to bore you for a minute with a financial jargon term. Oh, hopefully you can stay with me here. Standard deviation. What does that mean and why is it important to you? Well, first, what is standard deviation? Basically, it's a variance of a mean, right? There's typically, with various things out there, something isn't going to happen the exact same every time. So there's a variation of that, right? So who or what uses standard deviation besides investing? And I'll talk about about that in a second. But maybe some other things you've saw out there. Think of real estate or realtors. They're going to use standard deviation to look at maybe the average price ranges in a neighborhood or an area and see where the outliers are and what the average is, but maybe what the range of all of those houses are. So if you're looking to either sell or buy, you can see what that standard deviation is in the area. Weather forecasting, right? You know, you look at maybe when they're predicting a storm coming through or something like that, there's going to be a standard deviation of that data of maybe the different paths that it can take outside of that. Test scores. You know, if you remember back to when you were in school, grading on a curve potentially could have been a good thing for you, but what is the average, and then also what is the range? This is helpful for teachers or professors to understand if there's huge outliers, or maybe the test data was grouped tightly together and maybe everybody got the concept. So when it comes to investing, we look at standard deviation from more of a performance perspective. When you have a investment or group of investments, what is its average, but also what is the deviation? Unless you're holding a CD or some fixed investment, there's typically going to be some deviation. So the more risky the investment, the wider the deviation, right? You can have very, very good years and also unfortunately, some pretty poor years, right? So depending upon your risk tolerance will determine what kind of deviation you're looking for. If you're a conservative investor or somebody that doesn't have a big appetite for risk, you likely want a lower standard deviation so you don't have as much volatility. If you're somebody that wants great returns and is the gambler and you don't mind that risk, you likely are going to be okay with something that's higher standard deviation because you're okay stomaching those big ups and downs. But what if you are a retiree that's drawing income? Wouldn't it make sense likely to have a low standard deviation portfolio? So that way you have more consistency with your plan, more consistency with your income. I've yet to meet a retiree that wants their income to be determined by the performance of the market on a day-to-day basis. So when you're considering your investment and you're looking at averages, ask the next question. What is the standard deviation of this investment? That's going to give you a great cue of maybe what this looks like over time.
Great topics there in market fundamentals and then standard deviation. And you know, when I think of market fundamentals, it really kind of brings to mind all the headlines that we see in the news, okay? A lot of people, they give us a call and they'll be like, hey, this is happening in the world. What does this affect on the different stock positions that I have? And it always comes back to, well, what's the fundamentals of the market right now? And that's how we base our entire investment plan really on. Is where's the market at, where it's potentially going, what are the headwinds, what are the tailwinds. So we look at all of those factors to make sure that we aren't trading just purely emotionally, okay? We don't want to, I heard it explained best, okay? If the market's going down, think of it as a roller coaster, right? The only people that I've ever heard of that get hurt on a roller coaster are the ones that jump off, okay? So, I mean, if we know that the market fundamentals look okay and we think it's going to come back, it's probably in your best interest not to jump off that roller coaster, right? And that's why we look at that so we're not trading purely on emotion.
Hey, that's a great point, and it's a great visual. You know, I love Nick's example of that roller coaster ride because that's a great segue into standard deviation. You know, what is your standard deviation? What kind of roller coaster ride are you on? You know, you think about the little kiddie roller coaster that's, you know, pretty flat, and then you think about the Universal Studios roller coaster that's upside down and inside out and everything that it brings to your plan. And I think I see that kind of analogy play out in investment plans. You know, we have clients that they're totally good with wild roller coaster rides. I mean, it's a part of their investment statement that they're trying to achieve. And then I have other clients that are ready for a little bit calmer of a ride, and they want to lower their standard deviation. They want to have a portfolio that's much more predictable. And so, you know, if you feel like you've been on a roller coaster ride and you just don't know what your numbers look like or what your investment strategy statement might be, give us a call. You know, we have 4 different offices that we serve Northern Michigan from, and we can help teach first. We can help give you your numbers, how much variance that you have, how much risk you actually have in your portfolio, and then teach what your alternatives are. So again, if you have any questions, feel free to reach out, and stay tuned, because coming up next is the holistic approach to financial advising.
Will your money last as long as you do? Are you concerned about having enough savings to last through your retirement? Studies have shown that outliving their money in retirement is the #1 concern of most retirees, and rightfully so. Many have no idea if their money will last throughout retirement and don't know where to find answers to their questions. Centennial Wealth Advisory can help. We are financial professionals specializing in retirement planning. Call now to request a complimentary consultation and retirement income analysis that will answer your questions, such as, will I have enough money to last? How will the surviving spouse be taken care of? What impact will inflation have on my retirement income? How can I reduce my tax liability during retirement? And much more. Centennial Wealth Advisory serves all of Northern Michigan with offices in Traverse City, Petoskey, Gaylord, and Cadillac. Call us today to request your complimentary meeting and retirement income analysis.
You made it. Years of hard work, investing, planning, and now you're here. The long-awaited reward you spent a lifetime looking forward to. But what now? After years of growing a nest egg, now you may want to manage it. Use it to fund your dreams. Make it last as long as you need it. And leave some for those you love. So what do? Wall Street continues to be uncertain, and some conservative options have dropped through the floor. How do you maintain opportunities for growth and reduce risk of loss from market changes? That's where we come in. We are financial professionals. From investments and insurance products to tax reduction strategies and guaranteed retirement income you cannot outlive, provided by the claims-paying ability of insurance companies. You've worked a lifetime to get here. Let us help you enjoy it to the fullest. For a complimentary consultation, simply contact us today.
I'd like to share with you some of the benefits of holistic planning. So when we're looking at holistic planning, we're referring to not just your income plan, but your investment plan, tax, estate plan, insurance, including health, life, long-term care, all of those different areas essentially coming together and making sure that you have a holistic plan for your retirement. So when we're looking at income, your primary focus in retirement is driven by your income. I recently heard someone talk about how they went to their advisor and their advisor simply told them, well, we don't really do that. We just sort of look at specifically the investment. So you want to make sure that you have a strong income plan, and what good does that income plan do if you aren't factoring in taxes? This could potentially be one of the weakest areas when it comes to retirees, because they don't necessarily have a team of professionals helping them. There's a major difference, as we've talked about before, between a tax preparer and a tax planner. So tax preparers are essentially just getting those numbers in the right boxes and getting your taxes filed on time, versus a tax planner that's likely not during tax season, sitting down with you, evaluating these numbers and what the long-term projections look like for your tax situation. You know, what about your health insurance plan? If you're retiring prior to 65 and utilizing the marketplace, then your income plan plays a major role in whether or not you might qualify for subsidies. So you'll need to know what those investments do from when you're drawing them and what impact that'll show on the tax return. You know, do you have a misalignment on your investment structure? Just like a vehicle, if it's pulling one way or another, and then you have to steer to correct it, you know, is it time to have that, that portfolio looked at to see, well, is it really matching up with the direction that you want to be going with your retirement plan? What about the insurance world, including, you know, not just the health insurance, but life insurance or long-term care, annuities? Have you evaluated all of your different options? It doesn't always mean you need all these different tools and types of products in your plan, but it's important to have a discussion and better understand what they are and what purpose they might serve. Lastly, did you bring everything together with an estate plan? Your assets need to know what direction they're going upon your passing, and you don't want to end up seeing those go through probate, and potentially you have that long lost relative that all of a sudden thinks that they deserve to inherit some of those assets that you left behind. So here at Centennial Wealth Advisory, we believe in holistic planning and have a team of professionals to help in each of these different areas and help you plan to retire well.
Well, if you didn't know it yet, here at Centennial Wealth Advisory, we're more than just an investment planning firm. We offer a ton of great services, all that pertain to the entire retirement picture. You know, recently in the Gaylord office, we had a couple come in that didn't really watch the show and didn't know a lot about the company, but they were shocked to find out that we could also help with taxes and health insurance and how vital that played in their whole retirement picture. So this couple, they retired about 60 years old, and they lost their health insurance from their employer because they're retired. So they wanted to figure out what the best route for them to go to be insured. And based on their income and so forth, it turned out to be marketplace insurance. Now, what they didn't realize is that if they cross a certain income threshold, they wouldn't qualify for a government subsidy to help offset their health insurance anymore. So it was a very eye-opening experience to them, and they were so grateful to be able to have everything under one roof. I know, Jack, you had a similar situation as well?
Absolutely. You know, we come across this a lot where, you know, people will ask me, hey, what do you do? And I say to them, okay, have you ever imagined trying to put together a 1,000-piece puzzle? I mean, I'm sure some of you have put together a 1,000-piece puzzle. Now try to do that without looking at the box or even having the box accessible. You know, with a holistic approach, we're trying to take all these data points of all these different interconnected things in somebody's plan and make the best picture possible. You know, I also recently came across a case in the Cadillac office where they were early 50s, and they said, you know what, the stress of work is just killing us. Married couple, they had just been putting their head down and going to work. Never really looked up to plan, never really looked up to take a breath to see, you know, what they had been working themselves into. And so we took a deep breath and we said, okay, well, let's start gathering all this information. And what I found is that there was a lot of information that they didn't know, or even some information that they were carrying that wasn't even accurate. You know, they thought, well, I can't get at any of my tax-deferred accounts penalty-free before 59 and a half. And so, well, actually, you're actually in one of those situations you could. And so they had accumulated a lot in tax-deferred accounts. They did not have a tax plan. That was a red flag that we got to talk about and start working out what a good long-term tax plan was going to be. Their health care was going to be related to their income, okay, so until they got to 65. So we worked out a health care plan, kind of what Nick was talking about. And then the last thing is they had no legacy plan in place. They had accumulated and saved up and done a good job on that front, but there are a lot of assets that did not know where to go in the event they were to pass away. And so, you know, we're also able to help, you know, clients get their estate in good order. So if any of that stuff is of interest to you, if you're worried that you don't know something, we get to lead with education. You will never be pressured to become a client. We get to teach every single week, and it's something that we love to get to do. So again, tune in next week, same time, same place.